At 2.5 to 3.5% per year, we all know inflation is a huge problem. How do you get around that? 1. Compound interest. Start investing. Most people's incomes don't increase by at least that much every year, which means most of you are not keeping up with inflation. Let's say you're making 30K a year. Even though it looks like you're making the same every year, that 30K is worth less, meaning the buying power of a single dollar goes down, so you'll need more money to buy the same thing. Let's look at how compound interest works. This is a compound interest calculator. Let's say you're earning on average 8% interest per year on your investments. You invest $10,000 without adding any money. After 10 years, that investment will be worth $21,589. And after 20 years, that investment will be worth $46,609. 8% is actually really conservative because in the last 10 years, at around 2011, the S&P 500 was doing on average 13.95% per year. So if we input those numbers and we make this 10 years, had you invested in the S&P 500 back in 2011, just $10,000, that same amount would now be worth $36,909. However, we also have to account for inflation. If we look, $10,000 right here is the same in 10 years as $13,048 after inflation at an average of 3% per year. And after 20 years, it's $17,535. A lot of people don't stop to think about how much inflation affects them and their future. You still have to factor in that 2.5 to 3.5% per year, which means you're not actually making 8%. However, compound interest is by far the best way to counteract inflation because in every job, even if you manage to make 100 million a year or more, you eventually cap out, which means once you don't consistently make more money every year, the money you earn is actually worth less. 2. Creating a business and selling products and services. How many of you have worked for someone else? When you're working for them, you're not always going to get a raise year after year, even if you're working harder or bringing in more money for the company, which means that same salary is actually worth less every year. Some of the best types of products and services to sell are food, energy, and housing, because these are consumer staples, which means they're essential and always high in demand. In other words, the price of these products and services continue to rise every year. You can increase the price of these products and services with inflation or simply sell more and find ways to increase your income. Because when you're the owner of your own business, the amount of money you make is based on the sales you have that year. 3. Invest your dollars into the limited physical assets like gold and silver. As the value of the dollar goes down, the price of these precious metals tends to increase in value. A metal like silver differs with gold because it's limited in supply and used by big companies around the world. Where gold is hoarded, silver is still used and will only increase in value as the silver supply continues to decrease over time. Having a mix of both of these precious metals on hand is a great way to protect yourself from rising inflation. 4. Invest in positive cash flow producing real estate. The most important thing here is to make sure the properties you invest in will turn a positive cash flow on a monthly basis, meaning the monthly income from the property is higher than all the expenses. This also exposes you to asset appreciation because the value of the property will increase over time. 5. High interest savings and checkings accounts. It's always important to have cash on hand, and you never know when you'll need it. To take advantage of this, keeping your money in high interest savings and checkings accounts will allow you to keep up better with inflation. Thanks for watching, and please remember to smash that like button and subscribe so you don't miss out on future videos. Remember to comment down below for any new videos you'd like to see.